This is the Future of Finance. Hi, everyone. Welcome to the Future of Finance podcast. I'm Georges Dyer, and today we have Marieke Spence on the show. Marieke leads a network called Impact Capital Managers, made up of investment management firms that work in private markets. So think venture capital, private equity, private debt, and the like. Marieke has a really interesting view on the whole sustainable and impact management field from her work with these really exciting and innovative firms. And I think it really helps give a sense of just the growth and the breadth of the whole impact investing landscape, specifically focused on those impact strategies that seek market rate returns. So not giving up financial returns to have impact, but seeing impact as a way to drive strong returns. And Marieke talks about some of their research that shows that to be the case amongst their members. So we talk about ICM's work in general, the themes that they tend to focus on. We talk about financial performance and fiduciary duty, as well as some of their work with students through a fellowship program that they offer, providing internships at their member firms. So anyone interested in that should definitely check it out. Marieke and ICM have been great partners in our work at the Intentional Endowments Network, so it was a pleasure to have her on. I hope you enjoy it, and I hope you check out ICM's work. As always, follow the show, share it with your friends. And now here's my conversation with Marieke. Hi, Marieke. How you doing? Welcome to the podcast.
Hey, George. Thanks for having me.
Yeah, I'm excited to catch up and share a little bit about your work with Impact Capital Managers. And for those who don't know, you run what is a network of private capital fund managers that invest for superior returns and meaningful impact. And I'm looking forward to diving into what all of that means. But first, just for background, why don't you tell us a little bit about your background and how you came to be leading this network?
Yeah, absolutely. Happy to, George. It's a longer story than we have time for on the cast. So I'll just kind of give you my most recent, the hat that I most recently worn. I came to ICM from the Synergos Institute, which is an organization that cultivates bridging leadership to solve complex problems around the world. So that's an approach that's based in building trust and collaboration. And I was a director of the Global Philanthropist Circle there. And I helped members of the circle sort of find and harness their inner purpose and sort of lean into and learn tools and concepts like impact investing, systems thinking, thematic areas like regenerative agriculture and things like that.
Mm-hmm.
And then found my way to ICM via sort of a sidebar conversation with a former colleague at Synergos at SOCAP in 2018.
Mm-hmm. Nice.
Yeah.
Is Synergos, so the people in that are generally people that have leadership positions or means and want to make positive impact, more or less?
No, it's actually more about helping others who want to become bridging leaders to figure out what that means and how to convene and to collaborate and to
Gotcha.
sort of really identify with their inner purpose and kind of do that inner work so that they can be more effective leaders.
Yeah, gotcha. Well, as a fellow leader of a network, I certainly see the value in all of that. And yeah, tell us a little bit about how ICM does that and sort of the origins, I guess, about how that network came together.
Yeah, absolutely. So ICM, as you alluded to earlier at the top, this is a network, a membership association that was created by and for general partners of leading private capital funds that are committed to achieving both superior investor returns and meaningful impact. So we are kind of, to get wonky for a second, we're a trade association, and we do also work with our affiliated 501c3, the ICM Institute. And together, those organizations have a joint mission of advancing member performance on the association side and scaling the impact investing industry with integrity and authenticity. So, prior, kind of why ICM, why was it started? Before we were incorporated, there wasn't really a dedicated home or network for market rate managers in the private capital impact investing space, and not an association that was really committed to impact with integrity. So this was kind of a juicy opportunity for our founding members to demonstrate best practice for this particular slice of the market and for the field at large, and including, of course, ways that impact can drive competitive returns and that you don't have to have a trade-off. So that idea was very key to the formation of the group. We started officially as two incorporated organizations in early 2019 with about 5 or so member funds who didn't know they were members yet at that time. And we've grown to about 150 funds today.
Wow.
And those funds, just to give people sort of a sense of the shape and the size, I mean, those funds have collectively deployed more than 70 billion US in impact focused capital across more than 4,000 companies around the world. We are selective in our membership, and we do have criteria for our members, and happy to kind of go into that as well. But
Yeah. That's great. And it seems like it's growing fast too. I see it seems like on LinkedIn every other day there's a new exciting member announcement. Has there been more growth recently or has it been pretty steady? What's that look like?
yeah, it's been pretty steady, George, I would
Mhm.
say. We are, again, selective in our membership, and we do have criteria. And so we love to sort of shout it from the rooftops when prospective members kind of gone through our vetting process, if you will, and sort of we feel like there's a great mutual fit. So we get really excited about that. So we like to kind of give them some love on LinkedIn. Yeah.
Yeah, nice. And then what are some of like the purposes and activities you convene them and pull them together to learn about these topics to expand their impact? What's sort of the drivers
Yeah,
there?
absolutely. So, again, buy-in for our members, very member driven. We're
Mhm.
pretty scrappy and entrepreneurial as a team. So the business of our members is just our business on the staff side. So whether that's, leveling up on impact practices, impact measurement and management,
Yeah.
advocating for our members, building awareness of, what impact investing is. We do conduct field building research as well in partnership with the ICM Institute. We focus on cultivating relationships with limited partners, which is a kind of an evergreen interest for our members. And then we also focus on cultivating a skilled and diverse impact investing workforce. So those are just like a handful of the ways that we execute on the mission.
Yeah, got it. And what about the sort of themes? I mean, impact, there's lots of areas, climate change, addressing inequality, economic development. What are some of the major themes that are in focus, kind of right now or throughout the history of ICM?
Yeah, the themes are sort of the same. We kind of organize them along the same lines that we've always done.
Hmm.
So we kind of bucket our members into four categories, if you will, on our side. So we think about education and workforce development. We think about access and underserved communities. Sometimes that includes affordable housing or financial inclusion strategies. We focus on environment and sustainability. And then we also have, and that's climate tech and related. And
Hmm.
then we also have some managers who are really in the more squarely in the health and wellness space. And then there are some funds that are quite niche, really focused on one of those sectors or thematics. And then
Right.
we have other funds that are a little more opportunistic or generalist in nature, and they might have invest if it's sort of the right size, the right stage, the right team. They'll be opportunistic and they might look at things across sectors.
Lots of different themes. Yeah.
Yeah.
And what about the size of the funds? Pretty big sort of spectrum there in terms of size and track record and history for the members.
Yeah, I would say that's where we've seen things maybe change a little bit over time. It's less on the
Hmm.
thematic side. Again, you and I could talk about what we think are the trendy things, if you will, to kind of where things that are, terminology that's in use today. You think about biodiversity or sort of blue economy, right? Things like that.
Yeah.
But for us, I would say asset class has changed a little bit. Again, we're private markets. I would say we were had a lot of really early stage investors in the ICM community in the early days. And
Hmm.
we've seen that change. And I think that mirrors the organic evolution and maturation of the market in impact and private capital impact investing. So we've seen more growth in later stage impact funds.
Hmm.
We're seeing more impact debt and credit strategies in the mix as well. Some more real estate strategies as well. So
Hmm.
that's kind of what's changed over time, I would say, is sort of a movement away from just sort of the smaller VC strategies,
Right.
early
To some of those
strategies.
larger funds that deal with later stage companies.
Yeah.
How do you
Yeah.
deal, because we wrestle with this in our network too, just, different themes, different interest areas. Do you convene like specific events on certain topics that some of your members might be interested in and then have more generalist events? Like, how do you just sort of
Yeah.
practically address that?
Yeah, no, it's a great question. So events, we hold north of 40 events each year. So
Wow.
it is the primary way. So sort of like, how do we execute? We focus on certain things, and how do we do that? It's really by convening. And I know that IEN does a
Hmm.
lot of this great work as well. So because our community is our superpower, really, we just setting the table for our members to come together is one of the most fun and effective things that we can do.
Yeah.
We have a couple of really big format events in person a year. Sort of a third large, more social event is our Impact Awards Gala, where we will recognize an LP Leader of the Year, a GP Leader of the Year, and an Emerging Manager of the Year. Cynthia Muller, for your listeners, was the winner of the LP Leader of the Year award. Brian Trailstad from Bridges took home GP Leader of the Year, and Kendall Bedford from Sustain BC took home the Emerging Leader Award. So that's something fun and mostly social that we do every year. We have quarterly partner breakfasts. We have an Emerging Leaders Affinity group. That group meets as well on a regular basis. We'll do market intelligence calls where people might discuss deals with each other or interesting things that are exemplary in their portfolio or sort of sector trends. So we'll bring our members together based on sector focus or investment stage or asset class throughout the year. We'll do some sort of policy regulatory landscape webinars for our members too. And yeah, so it sort of all adds up to about between 40 and 50 events per year.
Wow, nice. How do you do it like geographically? Are you mostly US or North America focused, or is it global? And how do you deal with that in events?
Yeah, no, another great question. Sort of our origin story is very much US, but and the majority of our members are still headquartered in the United States, but we are technically a global network. So we have a growing number of fund manager members that are based in Canada. And we have some in Tokyo, in Europe, and even in LATAM now, South America. And yeah, so we will sort of convene them depending on, their focus area and sometimes their geography as well.
Yeah, I'm sure they all travel a lot too, so you can get them different places. And you mentioned a couple times GPs and LPs, and I think you sort of defined it, but for those listeners who aren't familiar with that, GPs are general partners. They're basically the fund managers, and then the LPs are the limited partners, the holders of capital, the allocators like endowments, foundations, pension funds, others that, invest their capital with the GPs. And so you mentioned kind of an aspect of your work is LP education around impact and just building awareness of what it is and kind of getting past some of the myths. So talk a little bit about how you do that and how you engage with those LPs.
Yes, absolutely. So we obviously can't achieve the scale part of our mission or our shared work without allocators. They play a really critical role. In last year, we formed our what we call our LP Advisory Council. And Mark Berryman of Capricorn Group chairs that. And that's 12 LPs who are advising or managing more than 2 billion each, and that are really actively deploying to impact. So they're real leaders in the space there. And they, it's, not a paid position. They're really kind of a kitchen cabinet or a thought partnership, group, if you will. And we'll do, work on shared priorities, whether that is sort of advocacy work, impact reporting. So norms around impact reporting and best practices there. And also kind of demystifying, so sort of research and sort of building awareness, for the field at large. We do a few other things with allocators as well. So sometimes at the tail end of our GP only meetings, we'll have an LP day. It's really substantive in nature. As I always, let people know, we're not a broker dealer or a placement agent. And so we're very, thoughtful about how we engage with LPs. And we find that that's actually one of our superpowers is because we are focused on education and awareness and best practice, provides a lot of fertile ground for collaboration with allocators. We love to sort of give and take an equal measure with them around substantive areas. So
yeah. And have you seen that interest from LPs growing? I mean, I feel like a lot of the impact space started with those that were really committed, wanted to have a positive impact, had resources or capital to do so. But as you say, as the space has grown, and we'll talk about financial returns in a minute, but I feel like in some ways, impact strategies have started to cross over with those that might not care about impact, but see the financial performance and some of the opportunities there. So have you seen sort of more traditional LPs starting to come and show more interest in the space?
Yeah, I mean, I definitely see it. And I think it's driven in part, and we'll get to it in a minute, I think, right around some of the growing track record that we're seeing. And I would say kind of a clear understanding of what impact investing is, and especially in sort of in the private markets. I think there have always been a group of family offices that have been pretty forward thinking. But we could probably name them on two hands, George, right? I think the
Right.
ones who've really been out front and done extraordinary, kind of transformative work in the space. And we need more, right? We need more to kind of step up and be loud and proud and sort of share examples of how they're investing and how that's delivered both impact and the returns that they're seeking. But we have seen more institutional allocators jumping into this space as well. And I think it's again based on track record, strong teams coming into the space. And we've seen some early signs and some evidence that impact investors, fund managers, can both kind of go neck and neck in terms of returns with traditional investing or non-impact or impact agnostic investing strategies, but they
Hmm.
may also have a mildly protective element. So if you think about protecting against downside, in down markets, or being more resilient, you look at things like loss ratio. These are things I'd love to see more research on. So sort of a call out to the field if people are curious about that. But I think that it's they're coming in because they have demand from clients and customers, right? There's a huge intergenerational wealth transfer that's underway right now. And so there's only going to be more interest in this over time.
Hmm.
But it's also because we're seeing the track record there.
Yeah, yeah. So let's talk a little bit about that because you talked about how the network is really focused on those managers that are focused on market rate returns and not, as opposed to concessionary
That's right.
returns. And I didn't actually realize it was sort of exclusively, and that was the origins of
Yeah.
ICM. But yeah, talk a little bit about that. I mean, that's the genesis of a lot of our work at IEN. Kind of revolves around this myth that sustainable investing strategies broadly require sacrificing returns, and that's a question we continue to get all of the time.
Yep.
So yeah, talk about a little bit about the track record and the performance history and what's actually happening out there with these managers.
Yeah. I mean, it's interesting because I feel like, I always like to start with pure intellectual honesty, right? And rigor around this, and that
Mhm.
not every problem has a market-based solution, whether catalytic or market rate, periods, right? So I come from a background in philanthropy and social impact. And so I think it's important to recognize that there is an important role there for that sector to play.
Hmm.
And then if you do think there's a market-based solution, there's definitely a role to play for catalytic capital or sort of concessionary return seeking strategies as well. Maybe you're just looking to return your principal like a long-term loan. You think about program related investments, which I'm sure some of your members utilize. There's a real group of strategies that if that makes sense to look at that.
Yeah, and
But
those
then
are
there's
just
also, yeah,
again for our listeners, catalytic PRI program related investments
yes,
are investing in things with an expectation of a lesser than market rate return.
intentionally seeking exactly a
Yeah.
lesser than market rate return.
Mhm.
And then there's a whole amazing universe of problems that can and should be, right, that are ripe for a sort of market rate solution,
Mhm.
or investing strategy. And the way I like to think about this is just if you can find a way to invest in something that is inherently very highly high positive impact, if you can scale that and if you can crowd in traditional capital, you're going to have a breadth of impact which is sort of undeniable, right? That could be really transformational impact. And it's again, that's where you get the sustainability of a solution, right? Is if you can scale it and sort of ground it in a market rate solution and something that works that way.
Right.
Um, so that's what, you can have smaller strategies, but it's not always going to scale. And of course, any business that fails and can't stand up from the business fundamentals point of view is not going to, it's going to lose out from the financial perspective, but it's also not going to generate an impact because it's a failed
Right.
business that way, right? So, you want to, for us again in the market rate part of the sandbox where we play, like we're really looking for those companies that have that ability to scale, generally more in sort of the traditional with the traditional tools of a private capital fund, whether that's VCP or debt. We conducted a study in 2023 called Strengthening Outcomes
Mhm.
that examined 230 discrete exits across 30 ICM member funds who proffered their data and participated in the research. And we asked our manager members to self-report on impact and financial returns. Some of that financial returns we were able to sort of, cross-check that with PitchBook data or with other, publicly available information. And the results from that were really promising, George. So 66% of those exits either met or exceeded financial return expectations.
Mhm.
And then 80% of those met or exceeded impact expectations.
Hmm.
I'll put the caveat or an asterisk next to the impact expectations, because as we know, there's still a dearth of convergence in the space and the sort of common definitions and methodology when it comes to impact. So that's somewhat in the eye of the beholder.
Right.
Again,
In terms of how you like measure it and quantify it.
exactly. Yeah,
Yeah.
sort of right. And then on the financial return side, I mean, if you go a level deeper and you say, okay, well, what about the degree and distribution in terms of those returns or those expectations? For the 30 funds that participated, their net, not gross, but net internal rate of return, their IRR was over 25%.
Wow.
So that was, I would argue that's quite competitive with market rate, kind of non-impact returns.
Right.
So again, this is historical looking. This was done in 23. We know market conditions change. But I think it's really promising. And I think it's, there have been other studies that the Jen and other friends in the field have done that corroborate this
Yeah.
track record. So again, fundamentals always matter, picking the right team, kicking the tires, doing all that. You really want to make sure you're knowing what you're getting into, but there's definitely track record there. And if you want to scale impact and achieve your financial objectives, you should be able to do that.
Yeah. Yeah, if it exists, it must be possible. And I don't know if you've seen it. There's another report that just came out from the University of Oxford with Schroders around,
Yes.
yeah,
I think
driving
that was
alpha
listed
through
equities,
impact.
but the
Oh,
same
is it?
idea.
Yeah,
Yeah.
yeah,
Yep.
gotcha. And how do you think about in terms of the impact side of things? You hear this criticism sometimes that if these are market rate strategies, anyways, is it really additional in terms of impact? Like, would these things happen anyways? Do we need to call it impact, or is this just the way the market's going, kind of thing? And in
Yeah.
my mind, like I sort of hope that's the way the market's going, and that's a
Sure.
great sign. But yeah, how do you or your members sort of think of that definition of impact in that context?
Yeah, I mean, I think that there's definitely a role for what we would call investor contribution, and it's
Hmm.
important to understand that and interrogate what that is. But we are really mostly concerned with how do we kind of crowd in traditional capital to these things where they might not understand, or they might not even be aware,
Yep.
traditional investors, that there is such a thing as an impact strategy, and they're not really kind of aware of the opportunity set there.
Hmm.
Um, so there's still a lot of education to be done, and that's part of our work, right? I think long term, it would be nice to think that impact is completely embedded in, and that that's going to be very clear, and that you need to make that case. But I don't think we're there yet, not by a
Hmm.
long shot. So yeah,
Yeah. Yeah. And how about, I mean, obviously closely related to the financial performance piece is the fiduciary duty piece. And as we work with endowments and foundations that are, very concerned about their fiduciary duty and want to be sure that they're allocating their capital to strategies that, maybe align with their mission, but fulfill
sure.
their roles as fiduciaries too. So how have you seen that evolving and that kind of conversation showing up in the network?
Yeah. I mean, again, I think that the evidence shows that there is no definition really of fiduciary duty that is antithetical to impact investing, the way that I would define it and the way that our members practice it. And I think your members as well. And so, I mean, I really think it's right. It's really about understanding what is material,
Hmm.
and understanding sort of risk analysis in a sort of a smart way, the way any investor would. And I know that, there's semantics, apples and oranges, but this is really kind of, I don't really see um, the definition necessarily changing so much as understanding what is possible and feasible
Hmm.
um, within the current and existing definition of fiduciary duty.
Yeah. To me, it seems like oftentimes there's just sort of a mentality or a mental model where as soon as we talk about positive impact, that there's this just assumption that there's going to be some sacrifice of returns like we were talking about. And so, yeah, if the data shows that's not the case, obviously there's no violation of fiduciary duty there. And I think, the contrary piece is that if you're not paying attention to these big picture sustainability challenges that are obviously impacting businesses and impacting the
Right.
economy, then you're missing something as a, part of your fiduciary duty.
Yeah. I mean,
Hmm.
like, sometimes the way I like to talk about impact and example ESG, is
Right.
impact or sort of ESG or sustainability, that type of risk analysis is really about how the world affects the bottom line of your company, irrespective of what your company is in the business of producing.
Hmm.
And there's an important case to be made for why you'd want to understand all of those risks, right? Or the way that the world is, right? It might be whether that's wildfires or things like that, right? And then impact investing is really about the way that your company its product or service by scaling that is affecting the world, right? And so it's a slightly different way of thinking about it, but they're both really material and interesting, and have the ability to come into sort of risk and return profile of a particular strategy.
Yeah. And do you see managers? I assume there's different approaches to this amongst different GPs in your network, but sometimes you see impact investors looking at a solution, this company is driving a solution in climate change or affordable housing or whatever the case may be. And they say there's a good business model here. It's going to have a positive impact, and that's an impact investment. And then also sometimes you see GPs investing in companies that say, there's a lot of opportunity to improve how they're doing things so that they can have a more positive impact, and that's going to add value to the business. Do you sort of see different funds take one or the other approach? Are they kind of blended, or how does that play out?
No, that's a great question. And I think that the space is like rapidly changing, and it's also exciting to see trends. Obviously, trends, they've been around for a while, but employee ownership strategies are sort of coming into the mainstream conversation as a really potentially high impact tool that, one could theoretically, again, apply kind of irrespective of particular widget, if you will, for the company. Although there are certain conditions under which that certain companies and models are much more apt and sort of better suited for an employee ownership strategy. But yeah, I mean, I think, again, we're primarily thinking about the widget. We're primarily thinking about the inherent impact of the widget and what the company is in the business of doing. But we are also interested in how, as a fund manager, if you think about your fund manager contribution, and your sort of additionality as a manager, there are ways that you can also kind of squeeze more impact out of the holding period with that, and that relationship with that company too. And so we look at the gainful jobs approach, right? Or we look at quality jobs. We think about employee assistance funds. We think about how a company does business. All those things matter as well. And so there are, going back to the ABCs of the impact management project, sort of a blast from the past, but a lot of our members think about, the C column, right, which is contributing to solutions, but there's a B, and the B is benefiting stakeholders. And you can kind of move a company. We see impact managers sometimes moving a company from A to B to C, right, over time. And so we're just trying not to be overly precious too about how we define impact. It's coming in different strategies, shapes, and sizes all the time. So sort of being open-minded to the ways that managers are having an impact too.
Yeah, got it. And I feel like, the impact space has drawn and attracted managers from more diverse backgrounds, from underrepresented backgrounds. I think there's a lot of student interest in this space. So talk a little bit about kind of the emerging managers and sort of the next generation of investors that you're seeing in the network or working with in any way.
Yeah, definitely. I mean, our minimum AUM for our members is about 25 million. I would say the definition, I'd be curious to hear your take on this too. The definition of emerging manager is changing over time as well. So we have larger pools of institutional capital coming into the space, maybe raising the bar for what they think of as an emerging manager, right? But we also know that smaller pools of capital tend to correlate with fund managers who may identify with backgrounds that are traditionally underrepresented in the space. And so it's really important that we are aware of that, and that we're thinking about how to sort of solve for that, because that's a stranded asset in a way, right? Is sort of making sure that we've got some fantastic talent out there. We want to make sure that we can scale those funds and sort of kind of continue to cultivate that best in class community. So for us, it's really quite intentional to have the AUM minimum be around 25 million. We want to have managers in the mix who are actively investing, who've reached their first close, and are kind of really there in terms of track record and kind of that intentionality. But 25 million is a pretty small strategy, right? And I think a lot of institutional allocators, they've got concentration limits, right? They've got perhaps a carve out for impact for alternatives, and so they can't always participate in these smaller pools of capital and kind of help to scale those funds. So I'm actually kind of excited to see strategies like funds of funds in the space, other intermediaries, other mechanisms for institutional capital to participate in the really exciting opportunity that's represented by some of these smaller managers. Too, ICM managers are on average, I think, I don't want to speak out of school, but a lot of them are between 300 and 400 million. And, those are, but some of them are smaller, and we have some larger ones as well. But it's, again, larger pools of institutional capital coming into the space. That's still not a huge fund compared to the sort of the market at large. And so impact is still, it's still a little bit, the pools of capital are still a little bit smaller, even for second and third time managers. So we're trying to change that over time.
Yeah, got it. And what about the student work that you do?
Yeah. So there's tons of, the good news here is there's tons of student interest. Lots of talent wants to get into the space. And that's a reason probably alone to start thinking about it if you're not sure. We run something called the Mosaic Fellowship. We've done this since the beginning of ICM. And it places really skilled graduate students at ICM member funds for the summer. It's sort of an intensive, immersive experience, 10 weeks, and on-site and kind of embedded with their funds. It's for graduate students. And the objective of the program is to cultivate a skilled and diverse impact investing workforce for the future, right? And so just thinking about that, we've had about 1,000 applications total for that program over the 5 years. And I think 500 applied last year, which is sort of 2x. So year on year is about 100% growth year on year.
Wow.
In terms of the number of the amount of interest in the program. And yeah, so we're seeing a lot of talent really interested in this, and I think also reflects growing number of courses and in graduate programs that are focused on social entrepreneurship or impact finance or conservation finance. And so I'm definitely seeing that anecdotally, and I would be curious to hear your thoughts on it too. But the amount of inbound interest is really high. The trick is, do we have the supply of jobs to be able to meet that demand? And so Mosaic is one of the programs that's helping with that, but there are a lot of other great programs in the space too.
Yeah, it seems like a great way to, continue to scale the space, and we're definitely seeing it. I think, as you know, we have a network called the Silk Network of student managed impact funds, or ESG funds, sustainable investing funds, or even traditional funds where students are interested in this kind of broad range of topics. So yeah, we see that continue to grow. Do a lot of the students, it's only a few years in, but for those that have gone through the program and then graduated, do some of them go back and land with the funds? Or are they going off and to traditional funds and bringing this impact experience, or are you able to track that?
Yes, we are, and we do. So we love numbers. So we go to our fellows and we ask them, we want certainly your qualitative feedback, and we want the host funds feedback as well. How was your summer? Has this changed how you think about career, et cetera? And the first way that we kind of evaluate the impact at ICM around the program is how many of these students, how many of these alumni are taking full-time roles at ICM member funds. So since for the data that's available, and there's always a lag because they're in the middle of their graduate studies when we query them, but about 40% have taken full-time roles at ICM member funds. Wow. And then a further 30% have taken roles in impact or sustainable investing outside of ICM. So that's head and shoulders above industry averages. Yeah, and it's really exciting to see. And I will add to that, I think, again, a lot of our members are a little bit smaller compared to maybe some of the strategies that you might see. And so they're not adding headcount every year.
Yeah, a smaller, smaller GPs, smaller private market funds, typically a pretty small team.
Yeah. They may not have visibility on whether they can grow or, expand their team until they're sort of halfway through their next raise, right, for their next fund, which is only prudent. And so, I think that that's really telling. We do have a few funds in the network who have hired 3 or 4 fellows, which is really, really exciting to see. So they get special gold stars, but yeah, it's really fun to see that. We also have a mentorship element of the program. We pair every Mosaic fellow with a mentor from a different ICM member fund. And that gives them just another way to build connectivity and learn about another option. And we've had mentors hire their mentees as well. Cool. After Mosaic, which is really fun to see too. But mentorship is a huge piece of this, right? That's how so many of us get our start, is through those connections. And sometimes for depending on where you come from and what your experience has been, you may not have that sort of human capital network. So
Yeah, just based on where you were born or where you grew up and all that
totally.
stuff. So that's great. And just to give a little shout out to how the process works, if we've got students who might be interested, what's the sort of annual cycle in terms of when you are looking for applicants?
Yeah, we usually give people a heads up in the beginning of the academic year. So it's
Hmm.
usually September.
Hmm.
And then, yeah, we've got a timeline. It's also all on our website, but usually we have the application opening up sort of just before Thanksgiving.
Hmm.
So kind of giving some students some homework to do after Thanksgiving during that break to sort of fill out the skills-based application. And then we'll do sort of vetting and sort of scoring during December or so. And then interviews will take place in January and February. And we hope to finalize the cohort by end of March,
Yeah,
usually.
nice. Very
Yeah.
cool. Well, people should check that out. And what about, so we're recording this in the middle of April 2025, so I have to sort of ask the question about the uncertainty that we're facing and some of the political
Yeah.
dynamics that are, threatening some of the themes that we work on around climate or addressing inequality or the like. So, yeah, how is some of this affecting your work, if at all? How are you thinking about it? And I guess, what do you think do you see a role for the impact investing community in kind of responding to some of these pressures?
Yeah, absolutely. I mean, I would say, listen, I mean, I think any investor, whether you're impact or a traditional investor, um, volatility or uncertainty is not your friend. It's not the investor's friend, right?
Hmm.
And so, you can kind of end up in a situation where there's sort of stasis, right? Or lack of movement
Yeah.
uh, because people just aren't sure, you know, what the next shoe to drop might be. And so I would just say, I think that's the biggest thing that we've seen. And that's, we'd love to solve for, right? We'd love to see that, a more stable kind of environment generally. Um,
Hmm.
so I think that is, again, it's not unique to impact strategies or impact investors, but yeah, I mean, I think that's anytime that there's uncertainty, volatility, that kind of whiplash is just not helpful.
Yeah. Yeah. And are you seeing any of your members kind of speaking out, or are folks just sort of wait and see mode? I mean, on the higher ed side, I think we saw some wait and see. And then just recently with Harvard kind of explicitly pushing back, and Princeton's president gave a great interview last week around just the need for that leadership in higher ed. And I just, I think from
Yeah,
the corporate sector, the investor sector, I do think those voices are important. So is that something that's
totally.
kind of come up yet or on the radar?
Um, yeah, I mean, it's, our members are, in terms of the advocacy work that we do, so much of it is really about, I mean, these aren't controversial ideas.
Right.
And so once it's really about explication, it's about education, and it's about awareness.
Hmm.
And when we speak to groups, no matter what their kind of political background or might be, or where they're based, or, there's usually a lot of receptivity. And, once you start talking about these companies that are based in their backyard and they're creating extraordinary jobs, right, for those communities and contributing to the sort of tax base of a constituency or, a geography, it's really hard to kind of argue with that and the benefits of that.
Hmm.
And so really, I think, our members are doing that, and we're helping to facilitate them to sort of hold those conversations and to sort of help to sort of more effectively tell their story and the stories of their
Yeah.
portfolio companies. And they're eager to do that. And kind of we're eager to work with others to tell that story more effectively. Yeah.
Yeah. I think that storytelling piece and the messaging piece is huge because particularly venture capital, but private market investors in general can be such a strong driver for improving people's lives and creating jobs and economic development, and done with a lens for sustainability to do so in ways that are going to serve us in the long term. And
Yeah.
I think there's some well-deserved perceptions out there around some managers that are more exploitative and can have negative impacts. And so I think just really articulating the difference is important.
I
Yeah.
mean, again, it's sort of, we talk about entrepreneurship, we talk about
Hmm.
resilience. and security. We talk about job creation, and we talk about sort of the extraordinary economic opportunity that's represented by sort of energy transition, or some of the things that are facing us now. It's a great economic opportunity, and private capital always has a role to play. It always has, and so I think that sort of efficiency, entrepreneurship, resiliency, these are things that we all share. So
Yeah. And all the stuff around sustainability. I mean, it's driving innovation. There's a need to build, there's a need to, grow in the good sense of the word in terms of adding value to people's lives. So yeah.
100%.
Yeah.
Right there with you, George, on that.
Cool. Well, Marieke, a few kind of quick takes here to just as we start to wrap up. So
Yes.
some rapid fire quick questions. What asset class do you think best provides the opportunity for both high returns and strong impact?
Right. So I wondered if you're going to ask me this question. I am not going to try to read the tea leaves around that. But I would say, not to sound like a broken record, but private capital in general, and it's not all private capital, right? People are doing a lot of different things, but private capital in general is something to look at, because there is something unique to that in terms of, irrespective of asset class within private capital, there's flexibility, there's a longer holding period. So there's that ability to be a control investor. And so you've got more tools in the toolkit to really squeeze out the impact, right? So I just would hope that people who are thinking about impact investing would take a look at the entire universe of private capital funds, because I think there's some really exciting stuff happening across that market.
Yeah, I figured you might be a little biased to private markets and might not want to pick within, but I love it. That makes sense. So what is the most exciting trend that you're seeing with your members in the space right now?
Yeah, I will go there, and I'll say I think I mentioned it before, but I think employee ownership is really exciting, and I love it because it's something that's about aligning incentives, and that's something, again, I think that we all can that makes logical sense, and it's definitely having a moment, right? And I think we see that with smaller managers that are focused on it and innovating and kind of using different tools within employee ownership, and then you also see it with larger, really large kind of household name managers as well. So I feel like it's catching on, and I love that, and I'd love to see more of it.
And it seems like a rare area with true bipartisan support right now too, which is
absolutely,
just great. Yeah, nice. All right, what's one thing about impact investing that you wish more traditional investors understood?
Again, it's going to sound like a broken record on this one. Just the idea that impact can be a driver for financial outperformance. Still a lot of people who don't believe that's the case. And so we're out there banging the drum for that idea.
Yeah, I don't think we can say it enough. So not a broken record. All right, I don't know if you're going to fall for this one either, but in terms of not picking favorites, what is there a manager or a couple of managers that kind of just come to mind that are doing really cool work that you want to shout out?
Yeah, I'm not going to go there on this one too. Just want to represent fully all the exciting strategies the ICM membership holds. But yeah, encourage folks to go to our website and check them out. All their logos on our homepage, so you can.
Yeah, I was going to say people should check it out because it's a really cool way to just get a better understanding of the space and some of the firms that are out there doing cool work. Nice. Okay. What about if you could embed one question into every LP's due diligence process? What would that be to influence managers or GPs?
Are you a member of Impact Capital Managers?
There you go. Straightforward and easy. I like it. Okay, what about one book, podcast, article, resource that you'd recommend to people who are interested in this space?
Yeah, well, other than your own fantastic podcast, right?
Thank you,
George. Have to shout out Better Money, Better World by Daniel Pianco and Achieve Partners. Daniel is a founding member of ICM and has been co-creating this podcast with us for a while. And it's spotlighting people like yourself, LPs, friends in the field, and then also GPs from our own network as well. Sort of kind of going deep on demystifying what is impact investing, also their sort of personal life stories and kind of how they got to where they are and how they think about the world.
Yeah.
So I think that's a good one. I'm going to cheat and I'm going to give you a couple more though.
Go for it.
I would say a close second would be Priya Parish's Little Book of Impact Investing.
Hmm.
So if folks aren't familiar with that, I think that's a great primer.
Hmm.
And then there's another compilation book that's just been published by the minds behind the Turner MBA Impact Investing Network and Training Program, the Turner Mint program.
Hmm.
And that's also a fantastic resource as well. So encourage people to take a look at that.
Nice. Very cool. And how about outside of work? What we find you doing when you're not working with ICM and on all these issues?
You might find me at a badminton game.
Oh
You
yeah.
might find me slowly killing my houseplants with too much water and attention, or maybe watching a K-drama with my kids. So yeah, those are just a few of the things you might find me doing, or running very slowly around Central Park.
Oh yeah. Nice. Nice. Ah, love running around Central Park. I've not done that in too long. Awesome. Well, Marieke, thank you so much. I got a couple of just final wrap up questions that we ask all our guests. And the first is just sort of a very big picture. What is
Yeah.
your vision for the future of finance? And what do we need to do to get there?
Yeah, I mean, it's a little bit tied into sort of vision around, ICM and what that 10-year outlook looks like for us. I mean, ideally, right, impact and sustainability would be embedded in all decision making, right? It'd be baked in. And so, there wouldn't be a need for us to be doing this work, right? Because it would just be so mainstream. So it's that mainstreaming question. And again, I still think we have some work to do there.
Hmm.
Um, I'm going to follow it though with another sort of thing that I hope that we can see in a way that makes sense, right? And that for the field, and that is um, a little bit more convergence
Hmm.
around impact, the definition and the methodology around impact measurement and management. And we've got some great friends in the field, including some of our own members who are working on that. I know that IAN's members are also leading in that space.
Hmm.
So we love to see 1,000 flowers bloom, and we love to see people defining impact in their own ways. But again, taking it back to intellectual rigor and really trying to understand what is the impact that all of our investments have impact. How, if we want to optimize for net positive impact, I think that the field does, and if we're going to get to that mainstreaming,
Hmm.
I think we need to see more convergence and sort of consistency around how impact definitions and methodologies are understood and applied.
Yeah, it's a great point. And I think, I've had this feeling that as a new field, there's got to be lots of outgrowths and different experimentation and different systems and frameworks tried. And then there's a
Yeah,
point where we need to kind of go back to convergence and figure out what works. And I think there's a huge role for business schools and academics to be playing in that too. I know a lot of the work has been done in the field so far and continues to be done there, which is great too. But I think as we can mainstream it into the academic side too, that's going to help a lot.
absolutely. Totally
Yeah.
agree.
Well, speaking of the academic side and kind of relating back to our conversation around your fellowship program and students, and just thinking about your own career path, what advice would you give to college students or young people that are interested in careers in this space to prepare themselves?
Yeah, I mean, having the interest. So 3 cheers for that. That's really exciting. So you're halfway
Hmm.
there. If you've got the passion and you're aware of this as a field and you want to get into it, awesome. So three big cheers. Jump on in, the water's warm, I always like to say. Um, I think as this field evolves, there are, I think, there's different ways to have an impact, and there's different ways to get into impact investing besides just wanting to be like, well, I would like to be on the investment committee and have carry and be in a VC fund that's focused on impact in like climate tech or whatever it is, right?
Hmm.
So I think that we still sort of hold on to ideas of what success looks like, or what the roles are within impact investing and sustainable investing. And the beautiful thing is that opportunity set is evolving and changing all the time and expanding. So if you really want to go deep on impact measurement and management, like we just talked about, sort of the need for some more convergence, that's a whole growing field. So if you love M&E and you love to geek out around data, that can be your way in. If you want to be an operating partner work at a startup in a thematic area you're really interested in, something that really drives your passion, that skill set, working on the front lines, building a company, is that valuable to a VC fund or a private equity fund? Absolutely, totally valuable. If you have fundraising skills, investor relation skills, those are totally applicable. So all the skills that are of use or valuable to a traditional investor are also valuable to an impact investor. But you also have all of that thematic knowledge, impact, ethos, and understanding and skills and human capital networks that you can bring to a role in impact investing. So there's just, the world's your oyster, honestly. We need more funds and allocators and companies who identifies impact to sort of advertise roles and to sort of tap into. So there's a matchmaking role. ICM helps to play that. IEN helps to play that via Silk. So, we're doing the work to do that. But I would say don't be shy, network, get to know the space, join some groups, some networking groups, whether it's Net Impact or Impact Capital Forum or other opportunities for people to meet others in the space. Go grab a coffee with somebody, ask them how they got into the work.
Absolutely.
Impact investors tend to be really excited about what they do, right? They're very purpose driven. And so they're usually happy to make time and space for emerging, rising talent.
Yeah, it's true. It's a great community to work in and no shortage of opportunity and need for talent. So, well, that is great. Marieke, thank you again for the time. Always great to catch up, and thanks for all the good work you're doing at ICM. And I look forward to talking again soon.
Right back at you, George. Thanks for your work and thanks for hosting me.
Thanks for tuning in for the Future of Finance podcast. We hope you found today's conversation insightful and inspiring. Don't forget to subscribe or follow us on your favorite podcast platform. And please take a moment to rate, review, or share the show. All of this really helps us to reach more people like you who care about creating a thriving and sustainable future. And it's a really easy way to have a big impact. So please do follow. A quick disclaimer, the content of this podcast is for informational purposes only and does not constitute investment advice. Investments and strategies discussed may not be suitable for all listeners. Please consult a financial, legal, tax, or accounting professional before making any investment decisions. References to managers and funds are for informational purposes only and should not be considered endorsements or investment solicitations. This podcast does not monitor fund performance or guarantee the accuracy of third-party materials or statements. This has been an episode of the Future of Finance podcast, exploring how finance can shape a vibrant and sustainable future. Thanks for listening, and we'll see you next time.